This is not advice. I'm not your advisor. Still got the Gatorade. Still rolling. Let's do some more. I have around 60K in a 403B slash 457, 30K in each. You have some questions about rolling it over to a Roth. All right, we're gonna realize some taxes. You're 50. Your wife is 54. She's a retired teacher and she's the one with the 60K. All right, and you're trying to decide what to do. Your financial situation has increased exponentially. I don't know what that means. You're thinking it would be better for you long term to either put the money elsewhere or roll it in a Roth to avoid additional taxes as a result of entering a higher tax bracket later on. Are you sure you're going to be in a higher tax bracket later on? You realize that you have to pay taxes on it when you roll it over. Okay, it's not a rollover. It's a conversion. But yeah, if you read correctly, you can have the taxes deducted at the time of the rollover conversion, or pay them at tax time. Yeah, you're correct about that. If you wait to pay them at tax time and you're not in what's called safe harbor, you might owe penalties for having paid late. So that's something to think about if you're planning to do a big conversion like this. But I mean, if you're really sure that you're going to be in higher tax bracket going forward, and this is going to be like your last year in a relatively low tax bracket, then I think the conversion makes a lot of sense. It's probably easiest. Well, I was going to say it's probably easiest to roll it into an IRA and then do the conversion, but you have to be careful with that. If your wife has other traditional IRA dollars, I assume she'd want to convert those too. So I guess you wouldn't need to be careful with it since it sounds like you want to convert all the dollars you have, but probably consolidating everything to traditional IRA and then doing the conversion is a little easier. Might as well wait until the end of the year, I think, to decide if you want to do it though. I don't see any reason to rush. And then if you do it at the end of the year, you can withhold the taxes and you won't be missing the dollars for that long. I think that's probably what makes the most sense. I got married and I changed my tax withholdings, but he didn't. You got married in May of this year, last year, and changed your W-2, your W-4, to reflect that you're married filing jointly. Yep. Your husband didn't do his. He makes double what you make, and it still says he's single. Haha, okay. No, you will not owe. You can expect to get a big refund because when you file married filing jointly, it's going to expect him to have fewer deductions. So you're in for a good surprise. Congratulations. Tax implications for my IRA. This will be your first year filing your own taxes. You want to make sure you're doing everything right. Here's the situation with your IRA. April of last year, right before tax day, you made a $5,500 contribution for 2018 into your empty Roth IRA, okay? Not going to hit your tax return. Does not hit the tax return. Will have nothing to do with your taxes. Then in November 2019, you made a $6,000 contribution to Roth IRA. Roth IRA, nothing to do with your taxes. Not going to affect your tax return. Not going to affect your taxes. At the end of the year, you're looking at your earnings, realize you were over the limit. Roth IRA in 2019, you recharacterized your contribution and its gains as a traditional IRA contribution. Did you take a deduction? When that's settled, you converted your traditional IRA balance to a Roth IRA, which was a total of $63,2619. The rep at Vanguard said you don't have to worry about tax implications of the backdoor process until next January. You're hoping to get an idea. Oh boy. Your corrective distribution happened this year. Yeah, but you didn't take I think I agree with the Vanguard guy. So you did a corrected distribution, which was a traditional IRA contribution. I'm not positive you're allowed to put more than the limit in the traditional IRA, even if it was gains in the Roth, but maybe you are. Anyway, it seems to me like when you did the conversion, you put in $6,000, so that was your basis. So you converted $326.19 of gain. So that's going to be ordinary income. That's really interesting if you can put the excess contribution earnings in there. I've never seen that before. It probably doesn't make a big difference, and I'm sure with almost no one on staff, the IRS isn't going to figure it out. But yeah, I think you're going to have $326 of extra income in 2020. That would be my guess.